How exactly did the two sides diverge here?
So there's questions from two of the largest lenders, as you mentioned, Bank of America and Citi. Each of them differ in how they're saying their projections are opposed or in opposition to the Fed. So Bank of America said in its statement that it's talking to the Fed to understand differences in its comprehensive income over this 9-quarter stress test period. And separately, Citi said it was looking in to understand differences in its non-interest income. So in B of A's case, the Fed's projection was a bit rosier. For some of Citi's forecasts, it was the opposite. So it was more of a negative figure.
Katherine, what are the broader implications?
So the latest results released last week show that the biggest 23 U.S. firms, they can withstand a severe global recession and turmoil in the real estate markets and other markets. So although that broadly is a positive sign for the industry, the tests remain a flashpoint. With some advocates, they're arguing that these exams need to be tougher, and the industry groups are asking to fight against some of the looming changes. But overall, it's the changes that are in question, and it's going to be a key factor in determining how much banks can return to investors in future payouts. So that's why the investors are watching these announcements to see what is potentially going to be the likelihood for Bank of America, for example, in announcing their dividend payments, which they have not done. Citi has, but there are still a lot of question marks in terms of how these tests are going to change and how the banks are in these discussions going to get answers that might cause them to alter how they're dealing with their investors going forward and how they're going to potentially alter their own payouts.